get your take on all this talk coming out of the United States. Do you think it's a fair enough reason for investors to be selling down, or are we just getting caught up in headlines here?
I think up till now investors have been quite blasé over the debt ceiling and the emergency financing bill, which would have taken US financing to mid-November. But now it does look like a partial shutdown, a very high probability. So the market's definitely in a risk-off mood today. We saw the market down by 1.7%, with US futures down by 0.8%. It does follow on from 7 consecutive weeks of gains. And in those 7 consecutive weeks, we've seen outperformance by the materials and the commodity space. And that's mainly being driven by relative stability in the US and also numbers out of China outperforming. But of course, today we saw that being undone. And I guess the market's a little bit nervous because the last time we saw a deadlock like this in the US was back in August 2011. And if we have a look at the US stock market over the last 3 years, it's been a very good 3 years for the S&P 500, but there's been a lot of volatility. And if I take you back to August 2011, this is what it looks like. And you can see the market saw a sharp drop of around about 20% there. That was also the month where we did see gold prices hitting an all-time record high on that nervousness around the debt ceiling in the US, with gold prices reaching as high as 1,923 US an ounce. So the fact that during that period we saw definitely a risk-off environment sees the market a little bit nervous that we're going to see that again. And of course, gold prices on Friday reaching a one-week high. The other thing that really influenced the market today were the HSBC PMI, or the manufacturing numbers. They came in under expectations. The market was expecting 51.2. It actually came in at 50.2. So we saw the material sector in particular being sold off heavily. The materials sector was actually down by 1.6%, but interestingly enough, it wasn't the worst performing sector on the market. The energy sector was the worst area, with a fall of 2.3%, followed by the financial sector, which actually saw a fall of 2%. So altogether, a very weak day on the market, red across the board, and it's mainly the nervousness around the US which is driving markets.
Get company specific. I want to ask you about Oz Minerals today. Basically, we saw the stock soar earlier this morning on a newspaper report out in the UK over the weekend suggesting that Glencore is looking to snap it up, but then it came back a little on comments out from Oz Minerals itself saying it hasn't received any kind of proposal or any indication of a substantial shareholding. Do you think there's a chance that this one will turn out to be true?
It's amazing what a little bit of takeover speculation can do for a stock. Oz Minerals at one point during the day up as much as 6.7%, but by the end of the session, after the company came out to say it had not been approached, the stock actually only up by 0.5%. Now, it all started with a report in the Australian Financial Review talking about Glencore Xstrata taking up to a 10% stake in Oz Minerals and possibly looking at a takeover. Once that was denied by the company that they had been approached, we saw those gains really disappearing during the day. And if we have a look at Oz Minerals as a company, you know, it's been a very difficult time. The first half underlying loss was actually $36.1 million. And despite this loss, they actually paid a dividend of 10 cents, which was incredible to a lot of analysts and investors in the market. At a time when their business is under pressure, they still paid a pretty decent dividend, which isn't a healthy sign if you want to see sustainable dividends going forward. If we have a look at what they're predicting for the 2013 calendar year, they are predicting to see copper production of between 82 to 88,000 tonnes. But I think the key problem with Oz Minerals is if we have a look at Prominent Hill, we are expecting to see strip ratios decreasing from 2014 onwards. And remember, this is a project with a mine life only up to 2019. So it needs to replace this copper production, and it can do this in a number of ways. But if we have a look at its projects, they're pretty capital intensive as well as long dated. So we have a look at another one of their assets, Carrapateena. Well, this is expected to have a pre-feasibility study done by the first half of 2014, but it's still in that exploration pre-feasibility study stage, so it's quite a while off, and that would be quite a capital-intensive undertaking. So I think the problem with Oz Minerals is that it does need to replace some of its assets because of the short mine life which is left, and it has earmarked $750 million for acquisitions. It's also got a 19.9% stake in Sandfire. So it's probably more on the acquisition trail, and if someone was to take over a company like Oz Minerals, they would have to be looking at doing substantial capital expenditure, and they'd also need to have a very positive view on copper prices.
The performance of Asian shares today, Julia, and the different indices around the region. I can see the Nikkei certainly didn't perform too well. Hong Kong also slumping. What did you make of its reaction, I guess, to what's going on in the United States right now?
Well, Asia is seen as a high growth area, and when we see a risk-off environment, unfortunately we do see the markets around the region being sold off quite heavily. So Australia underperforming today, and markets around the region certainly underperforming as well. Interestingly, China's performance did hold up, but we are expecting to see China on holidays for the rest of the week. So the Golden Week holiday means that we're likely to see lighter volumes going through our regional markets. Interestingly enough, for the quarter though, it was the region which outperformed, and that's really because of this risk-on environment. For the quarter, we saw the Australian share market, the benchmark ASX 200, up by 8.7%. As we mentioned, the best quarterly performance that we've seen since September 2009. But also, if we have a look at the Japanese stock market, the Nikkei 225, up by a pretty healthy 7.9%. That compares to the US, which is up by 5.3% during the period, and the UK markets, the FTSE 100, only being up by 4.8%. So we certainly have seen outperformance by the region in the last quarter. Part of that is because of the stronger growth numbers that we've seen coming through from China, and the commodity space holding up fairly well. Also, if we have a look at the Australian market, I think one area that really outperformed was the Small Ordinaries Index. That was up by a massive 13.5%. And that's really because if you have a look at the top performers on the market, they were some of the smallest stocks. We saw stocks like Beetle, Ausdrill, as well as Link Energy up between 77 to 84% in a 3-month period. So it's great to see some of these commodity-based stocks are bouncing back today. All sectors were higher on the Aussie market, with the one exception of property. But if we have a look at the best performers, it's the material space up by 14.7%, the energy space up by 12.3%, and the consumer discretionary space up by 13.2%. So I think the fact that we'd seen better numbers out of China really drove a lot of the performance in these areas, especially the materials and the energy space. And of course, the consumer discretionary space, well, this was helped along by an improvement in both business as well as consumer confidence, and the fact that the elections had passed in September as well. So hopefully that will be an ongoing story. But really, I think the big thing for investors to watch in the last quarter of the calendar year is whether we are going to see China holding up and commodity prices holding up, to see whether Australia continues to outperform.